Hi, this is Greg McLeod from Elite Traders University, and today I'm going to share with you one of the top economic indicators that traders in Wall Street are always looking at to find great trades and potential profit. So watch what we do. Look how we into the market, how we exit the market, and take advantage of this big 8:30 news announcement. Okay, and make sure you like and subscribe. Click the button below. Click the button below and subscribe, and also turn on your notifications. All right, let's get to the charts. Share with you one of the top economic indicators that traders in Wall Street are always looking at to find great trades and potential profit. So watch what we do. Look how we into the market, how we exit the market, and take advantage of this big 8:30 news announcement. Okay, and make sure you like and subscribe. Click the button below. Click the button below and subscribe, and also turn on your notifications. All right, let's get to the charts. Hi, this is Greg McLeod from the Elite Traders University, and this is we're looking at the New York Open. New York stock market is just opened at 9:30 a.m. It's 9:35, about 5 minutes into the session, and we see that the pound versus U.S. dollar is breaking higher. Up at 1.4166. Even though we trade forex, and the forex never really closes, we do look at the U.S. stock market as another source of liquidity that comes in, because hey, guess what? You need money to buy stocks, and so that demand of money, we see a surge in the various currency pairs. So currently we're looking at the pound versus US dollar. I'm currently long at 1.4153. I'm looking for a move back to the old spike high that we had on February, say 23rd. We had a spike into the 1.4240 area, and we can see that price bouncing off of a long-term trend line that I wrote about in a blog. I wrote about the GDP that came out a little bit lower than expected. Came out at 4.1%. There were whisper numbers of possible 6 handle on the GDP, but GDP came in at 4.1%. But you know, in a normal economy, 4.1% is a pretty good rate for the gross domestic product, which measures the basket of goods and services and growth here in the U.S. And so, you know, usually when we have a good economic number, the dollar sells off. The dollar sells off. We can see that the pound and the euro, they're like the anti-dollar. So if we look at something like dollar CAD, we would see the Canadian dollar strengthened versus the U.S. dollar. We would also look at the dollar Swiss and look for the same kind of similar move in the where we have this this, you know, we can see the dollar actually Swiss franc almost rolling over a little bit lagging behind. We also check dollar yen to see the same type of production there, and it's kind of like flat. But if we look for a dollar index chart right here, and we can see that the dollar, this is the Dow Jones FXCM US dollar index, and we can see that we had a decline on the hourly chart, lower swing highs and lower swing lows. And we look like we're turning down from a level of resistance there, a trend line we can possibly draw, and we can see that we are just turning down, kind of like in a almost engulfing candle if it keeps going, right? But let's get back to what we're trading currently, and we are looking at the pound. And the pound is what I mentioned in the blog post, and we're up about 12 pips on that. And we can see that we're going to be challenging some some earlier highs that we had in the pre-market. One spot 4176, and that a quarter line at 75. So let's see if we can bust through that, fill this gap of space, because we had a big spike and then price gap down, and just cascaded down to a trend line, a 618 Fibonacci. And so now we're looking at price forming some type of a base there at the 50 period moving average. This is a 1 hour chart. We can actually drop even down to a 20 tick chart and really see some activity there. And you can see that we took trades, long trades, from this strong support area where price attempted to penetrate the 1 spot 4133 area and did not do that. So we got the makings of a double bottom here, multiple bottom. You can see the congestion here. We have what we call a demand zone. Some people call it a demand zone, where we had a series of a confluence of areas, support zones where price just, we got a little wrong color there. We'll go ahead and change that. And we can see that price came into this area, found support, and then just broke higher. And so we're continuing to hold on to our trade, and we're up. Our other position, we're down about 2.2 pips. We think that we would basically retrace this decline happened like around the lunchtime. This is 7. You look at 7 a.m. U.S. time is about noon London time. So you probably have the people, the city workers taking a break, taking lunch, starting some chips, and then coming back. And then you've got the U.S. crowd coming in, and they're looking to be taking it north. And we are profiting from this move. This is the move that I talked about in our blog post. And I want to show you where that blog post is. So if you want to actually find out some more about what we do at the Elite Traders University, that you can go ahead and take a gander at the posts. Come to Elite Traders University right there, and you scroll down to the bottom. We have our blog, and we have this was our article. We had how to siphon profitable pips from this statistic overlooked by most retail traders. And if you click right there, it will take you to the article, and also takes you to some talking points. And I try to teach, try to educate, and show you what we're looking at. And this was this is the pound versus dollar how to trade this GDP release that we had. So, and then there's some more information there. So you come over to Elite Traders University. It's elitetradersuniversity.com, and look at our blog, and click the blog button on the front, and it'll take you right to our articles. Okay. All right. And so let's get back to the trades, and we're up 22 pips. We're breaking out, moving on higher like George and Wheezy, making new highs. And I'm going to go ahead and take this profit here, 22 pips. Let's go ahead and take that. And we're going to take an additional pips right there. Okay, and then let's go ahead and take a look at our, what we did. Had one that we got one loss, so we took for like 0.5 pips, and we didn't cover the spread. But we did take a number of trades today. All of them are dated February 25th. That's today. And so we had a number of pips that we did. Just a tremendous trading.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!